struck Iran over the weekend. Will stocks easily shake off this geopolitical conflict? Joining me now, we got our Jim Schmigel, the Chief Investment Officer at SEI, and Dryden Pence, Pence Capital Management CIO. Gentlemen, welcome to you both. Jim, I will start with you. Just broad strokes, Jim, what do you make of the market response and reaction? What do you think the message the market is sending us here?
I think it's actually a good message, Josh, which is everybody take a step back. This is going to have longer-term ramifications. Don't overreact. Don't make any trades based on what we know so far. We're obviously going to get that very, very granular response from oil as we have a supply shock. There's no doubt about that. You'll get that initial reaction from defense stocks, from those that are kind of deeply involved in this current situation. But for the end investor, take a step back, take a breath. Don't do anything major at this point in time. We just don't have enough information in terms of how long this is going to last, or what the longer-term ramifications of this would be. So stick to your strategic asset allocation. Don't do anything foolish.
All right, Dryden, I want your take on here as well. And interesting, just for the audience, understand, Dryden, you bring a unique perspective because you're not just an investor, you're a veteran military intelligence officer. So give me your take as well. What do you make of the news? I'm sure you're tracking it like the rest of us all weekend, and the market response, Dryden.
Well, I think the muted market response is important because I think the market's actually having the correct response. This is, geopolitical events have about a 19-day turnaround from, drawdown of 3.3%, and then they recover. And so this is appropriate. But I think trying to get the ideas Jim brought up about how long is this going to go? What's the duration? And I think the key thing about the duration here is if you listen to Pete Hegseth's briefing today, the mission set is destroy.
What does that tell you, Dryden, destroy?
Destroy is a military term of art, and it means not only are you going to get rid of it, all of it, you're going to prevent them from being able to reconstitute. So not only, when they say we're going to, he said, we're going to destroy the Iranian Navy, that means we're going to destroy it. And we're also going to prevent them from being able to do it. We're going to destroy the Iranian missile system. They're not going to be able to be a threat to their neighbors anymore. And so destroy is a lot different than degrade or any of these other, or deny, or any of these other terms. And so that means this is going to go on long enough to really finish the job. And we have, local air dominance. They really,
let me ask you, if that's the mission, then when you heard Trump say, listen, this is a matter of weeks, this is, 4 weeks, does that time frame seem reasonable to you?
Yes. I mean, from my standpoint, yes. I mean, the thing is, they're going to continue, unless they change what they said they changed at the meeting. They're going to continue to hit these guys until they either destroy everything or they cry uncle. One of the two. And I think that plays into and we have a great arsenal, and we have great soldiers, and I think the American people need to be really proud, and I want to thank all of them for paying their taxes, because they buy body armor that keeps soldiers safe. And we've lost a couple of soldiers, and God bless them and their families and stuff. But the American military is out doing the nation's business. And the nation's business is to make the world safer. And when this is over, I think that's what's going to happen.
Jim, what for right now? Listen, the market seems to be suggesting that we don't think this is going to be going on relatively too long. We don't think it's going to be relatively too disruptive. As an investor, though, Jim, what are your signals that would indicate to you, okay, that we're staying the course? Or would there be signals raised to you that this is spreading, that I do need to get concerned, that I do need to think about making adjustments to my portfolio?
Yeah, I mean, it comes back to this kind of time frame. So how long is this going to last? How long is this going to be an issue? How long is the oil price or liquefied natural gas price going to be elevated? We came into this situation, as your prior guest noted, in a surplus framework, at least from an oil perspective. So we're going to be watching the clock more so than we're going to be watching anything else. But from the investor standpoint, this is why we've been pounding the table for quite some time. Highly diversified portfolio that includes some inflation beta. That means make sure you have some commodities in your portfolio in one way, shape, or form. It is notable, even when the market, I think, was down earlier today, rates were up. So what does that mean? That means that your preferred measure of diversification, which has been interest rates, didn't really serve you all that well today because there's an inflation component to it. So make sure that inflation beta is part of your globally diversified portfolio.
Dryden, here's what Evercore's Julian Emanuel, smart guy like yourself, been doing this a long time. Here's what he wrote his clients. He said, more earnings plus more volatility equals more upside. He said, delayed, not derailed, he says about this market. He actually raised his SPX 2026 EPS to 304. Does that kind of generally dovetail with your view?
Yes, it does. I mean, nothing in this war has taken all the stimulus off that's coming into this economy. You take whether the tax cuts, or you take about the refunds that we have from excess withholding. You've got $790 billion worth of additional stimulus coming in. That's 90% of what we put in during COVID. I mean, and it's going into an active economy. So you have all of that stimulus on top of a geopolitical flare-up that is almost I wouldn't say a nothing sandwich, but obviously we reacted pretty well to it. And so all of this is moving forward. So I think that his response is pretty good, and I would tend to agree with it.
Let me get your take, Jim, on what this could mean for the Fed, in that now we had a hotter than expected PPI print, got oil moving. Are there read-throughs there for the Fed? Do you think it means more likely that they stay on hold, or do they look through it?
I think they look through it. Dare I use the word transitory, but something like this is going to be a transitory effect on energy prices. The bigger issue for the Fed is the underlying trend in inflation. So, PCE is running now, entering its 5th year being above target. So outside of this, looking past this, which I do think the Fed will do, their issue is going to be the already underlying, somewhat sticky inflation level that we've been dealing with now for quite some time.
Dryden, I'll end here with you. So listen, when investors hear war in the Middle East, as Jim was saying, they make a beeline for oil and defense stocks. Energy sector on the move today. But energy has been the best performing sector in the market year to date. Are you overweight that, Dryden?
We slightly. I mean, we have a slight overweight to that, but we also have a bigger overweight to defense. So when you're hearing this war go on, and we're going to destroy, as I said earlier, there's going to be a lot of ordnance downrange. We're going to spend a lot of money with those companies, and we're going to have to replenish it in order to replenish our armory. So this is going to go on for a little while, and it's going to be good for those companies. You may not like war, but you might as well make some money off of it.
Dryden, Jim, we will leave it there. Thank you guys. Appreciate it.
Thanks, Josh.